I wanted to just kind of get started. We'll do some like kind of easy intro questions that I think, give a little bit of insight into Fireblocks as a company. But I think, when I look at some of what we're going through now, if we call it the quote unquote crypto winter 2, there's a lot of difficulty in the market, but as we've kind of talked about, that can often spurn some amazing innovations. And when I was thinking about how I wanted to start our conversation today, I thought it would be really interesting to hear a little bit about the origin story of Fireblocks, because I think it speaks a lot to the ethos and the principles that underline your company. Mm-hmm. And it really talks a bit to your commitment to quality and consumer protection in the market. So if you could share a little bit about that, I think it would be really insightful for the audience.
Yeah, no, I think it's a really wild story in terms of how Fireblocks started. So when we talk about crypto winter and down markets and all of that exciting stuff, Fireblocks was really born out of the 2018 crypto winter. And when we look at kind of the background of our co-founders, we have 3 co-founders, all ex-Israeli Defense Force in the cyber unit. And so very, very honed into cybersecurity infrastructure and everything around it. And so they were actually tasked with a hack that had happened on a South Korean exchange. I think it was 2015 or 16, to kind of investigate and figure out where and how those funds were stolen, and ultimately ended up being North Korean hackers that were able to get into the wallet infrastructure of this South Korean exchange and extract a bunch of Bitcoin. And so from that really spawned this concept of, well, all of these different infrastructures globally with all these different exchanges are very fragmented. If you look at a lot of the exchanges that have been around for 5-10 years, they've built their own infrastructure internally. It's built on legacy technology. And so the focus for our co-founders was saying, how can we build an enterprise grade and scalable and secure wallet infrastructure that can kind of ride on top of blockchain? And so essentially that's how Fireblocks came to be, again, out of the crypto winter in 2018. And over the first 1 to 2 years, it was really focused on working with a lot of the crypto native players in the ecosystem, so lending providers, exchanges, and market makers who just needed a more secure infrastructure, couldn't scale to the number of protocols and assets that were required, whereas our team was able to really build and scale and grow because there was such a focus on product engineering and security. And so leveraging MPC, or multi-party computation, which was really sort of that next evolution beyond multi-sig, if you're familiar with signing processes in blockchain. Won't bore you with the details there, but at the end of the day, being able to deliver this sort of new age infrastructure to market, again, focused on the crypto natives, the ones who are actually using legacy systems and technology, bringing them on board, and then starting to see, well, hey, there's a whole number of markets here that are looking at blockchain, that are trying to figure out this crypto ecosystem and enter into it. And so you look back at 2020, the fintech revolution, and COVID hits, and all of a sudden digital first, and everyone's really focused on, well, what are the products and services that I'm actually looking for? And so that's where we really saw a lot of these neobanks and fintechs starting to move upstream and really take wallet share away from a lot of the traditional banks, because they can offer better products and services. And so you look at the Revoluts and the Robinhoods of the world that are enabling this, PayPal as well, they just see the customer demand. And so that's really where we started to focus our attention. And I think over the past year and a half or so, a lot of the traditional space for financial markets, banks, funds, asset managers, are all looking to get some form of exposure into crypto directly or leverage some form of blockchain infrastructure. And what I like to say is we abstract away the complexities of dealing directly with the blockchain and allow our customers to really focus on the products and services that they're delivering to market. Because at the end of the day, it's all around how and what do you deliver to your customers and end users.
Yeah, and I think, some of what you've focused on just in those last few comments about helping your customers focus on their products and services and not necessarily have to deal with all of the enormity of some of the back end of, blockchain and Web3. along those lines, we know that in our audience, there's a number of, traditional financial institutions that are in the process of navigating some of what we see as the maze of getting into digital assets. And I think one of the questions that we at the Global Digital Asset and Cryptocurrency Association receive pretty regularly is, how do I get into digital assets and crypto? How do I transition and transform into this space? And what, if anything, would you say are some of the pathways or stepping stones to doing this responsibly and being able to engage in a way that protects, your own business and your customers and helps to minimize risk?
Yeah, I think step one is having an executive committee and some form of executive sponsorship on at least A, the evaluation of what to do, and then B, how to actually deploy it. And so it really starts with, again, who are your customers and what are they asking for? And I think also just as important, how can you stay a step ahead of your customers and figure out what they are going to want, which is, I think, one of the most difficult things to do in business. But at the end of the day, it's forming this committee, understanding what it is you're looking to deliver to market, and then really looking at that and saying, well, how do we do things today? How have we operationalized our existing business? What technologies are we using? And what my team does specifically at Fireblocks is kind of takes what people are doing today and kind of translates it to the crypto and blockchain space. And so security, governance, policies, workflows, everything that you do today in traditional markets, you need to lift and shift over to blockchain and crypto. And so it's really a focus of, can we get executive leadership from there? What are the products and services that are relevant to us and our customers? And then ultimately, how do we evaluate different vendors, partners, providers in this space to actually onboard and deliver these products and services to market?
Well, excellent. I really like the lift and shift. I might borrow that from you.
I use that way too much. It's consulting bingo from my older days.
Well, it's great. One of the things that comes up as well, like whenever we're speaking with some of the traditional financial institutions, is around, beginning this process through tokenization. Okay. So it's a little bit more relevant to perhaps some of what they've seen in the traditional financial sector. And it gives them a bit of time to build capacity, to elaborate systems, policies, procedures. I know that Fireblocks is very active in this space. And one of the really exciting things for me, at least, was you're one of our member firms, but really getting to know and deep dive into some of your different product lines.
Yeah.
I was wondering if you could talk a little bit about, what type of support you provide around tokenization and how that may relate to some of the audience here today.
Yeah, tokenization, in my view, is really going to be the catalyst of sort of global adoption of blockchain. I think we look out in the market today and over the past several years, and you have your Doge coins, you have your meme coins, you have all of DeFi, whatever it is. But a lot of people in the retail space are really just sort of chasing gains and yields. But I like to sort of delineate crypto and blockchain. And blockchain is the underlying technology and infrastructure that you build on top of. And in my view, is going to really be underpinning financial markets in the future. And so this concept of tokenization is really taking traditional assets and being able to then tokenize them or digitize them and manage it through wallet and blockchain technology. So very simple concept, but at the end of the day, there's a lot of considerations that go through that. And so I think stablecoins are a great example of tokenization, because it's taking fiat that's sitting somewhere, creating a digital or a token representation of that, and then being able to transfer it seamlessly, efficiently in real time from one wallet to another. And so if you take that concept and you look at any other asset in the world, what does that ultimately mean? And so we're working on a handful of projects globally on carbon credits. I think,
excellent.
yeah, it's a really, really fascinating market, something I didn't really know a lot about up until probably 5-6 months ago. But ultimately, carbon markets globally are very opaque, very inefficient. You have different models in different regions, and ultimately, this demand and supply element or aspect of carbon credits, nobody really knows what the true supply is. And so I think that market is very ripe for disruption using blockchain, because what you have the ability to do now is say, I have a project that is going to create 100,000 metric tons of carbon credits or offsets. I can now take those 100,000 credits, put them on chain, and now I have a digital representation. I now know exactly the source of that credit. I can tie it back, and I can now actively move, trade, and manage that credit from wallet to wallet using liquidity providers, OTC brokers, whatever it is. But the important concept around that is, as soon as that carbon credit is used against emissions on a corporate's balance sheet or an individual's, you have the ability to burn that credit. And so that token can no longer be used for and by anyone else. And that's where we have a lot of transparency in that market today, is this concept of the double spend. And so a corporate or an individual saying or claiming, I've used this credit, but then it being sold off in some secondary black market and now being used again and rotated. And I know there's this entire black market of carbon credits from what I've read in Europe. And so that's a great example of a traditional market, very inefficient, very opaque, that could actually benefit a lot from blockchain. But then again, stable coins, direct bond issuance on chain. And then there's other markets that maybe could use it, but not necessarily as relevant, not necessarily going to create efficiencies. Like look at the equities market. I think that's moving and has been around forever and is efficient enough. But you look at bond issuance, I think there's really interesting aspects. All the intermediaries involved in bond issuances, tracking interest and coupon payments, but taking all of that, managing it through technology and a smart contract to be able to initiate corporate actions directly on chain, pay interest direct to a wallet that's holding that particular token.
Well, I love the focus on the carbon credits. I think it's extremely strategic of you, especially given some of what we see coming out of the SEC and also out of the European Union's non-financial reporting directive. So excellent, very interesting.
Yeah, again, I urge you to read up on these markets because it's fascinating just from an educational perspective.
Well, excellent. Now, I don't know if you know where I'm going with this, but you did talk about some of the stable coins. And today we've talked, very heavily about the fact that stable coins are in some ways a gateway into the DeFi space. And, along those lines, I see a lot of opportunity for people to, explore and consider how leveraging, a product like Fireblocks can really help them to do this responsibly. I was wondering if you could talk a little bit about, how your product lends itself to, especially those that are regulated or those that have a very sincere commitment to the public interest and consumer interest, and engaging with your products to advance into the DeFi space. Yeah,
it's an interesting question. I think there's a lot of opportunity out in the space of DeFi and the world of DeFi. And from a Fireblocks perspective, we're essentially enabling access really to anywhere you want to go or anywhere you want to take your business. And so what we do with that is then provide a governance and workflow layer around it. And so you can lock down and restrict where your employees, where your operations and treasury teams can actually move and transfer assets. And so if there are specific protocols that you don't want to enable or don't want to access and swap into, then you just wouldn't enable that through Fireblocks. And the biggest piece of this, and you see it on crypto Twitter and everywhere, is do your own research. Is figure out who are the players in this space, who's running these protocols, what's happening on the back end. If you're lending an asset to a protocol and you're earning 20% yield, I mean, sit down and think about it.
Yes, risk and return, my friends.
Yeah, and then at the same time, whoever's paying you 20% is clearly, hopefully earning more than 20%. So how the hell are they earning 40%? And then on the other side of that, how's that person earning 60%? So you really got to kind of follow the money and just kind of sit down and figure out what is actually happening here. But at the same time, we've partnered with Aave to create a permissioned DeFi pool. And so really every participant within this pool has gone through a base level of KYC and onboarding. And so obviously the returns and the yields are not going to be as high as you see in a lot of these other ones, but you do know that everyone in this pool is sort of playing by the same rules. They're all regulated financial institutions. And so it at least gives some comfort, and it's what I call a more compliance-friendly solution for at least an entrance into DeFi. But I think the underlying technology, the concept of smart contracts and removing counterparty risk is hugely important. And I think it's just an evolution of kind of this new age of financial markets.
Well, excellent. And, again, I really was pleasantly surprised when I started to really deep dive into some of what your product offerings were. I think from my side, I was extremely impressed with the breadth and depth of products that you offer. And, not surprisingly, it parallels a lot of the conversational topics that we've had today. Mm-hmm. So everything from Bitcoin to NFTs to GameFi. And a lot of edgier kind of next gen, next wave type opportunities. And I think that it really gives your customers and clients a great opportunity to really stay ahead of the curve. Mm-hmm. Along those lines, though, I was wondering if you could talk a little bit to some of the products and services that you offer that are sort of the broader Web3, GameFi, really just provide for the audience a bit of insight on that.
Yeah, I think part of it comes down to what is Web3, and I feel like there isn't really a consistent definition out there. I think a lot of people equate NFTs to Web3, and I do think that is an element or a subsegment of it, and this concept of, hey, not I'm going to buy this picture of a monkey and hope that it 10x's overnight, but for content creators and this concept of ownership of your own art and the ability to attach royalties to that. So as you issue an NFT and then as that's traded on the secondary market, you can embed the logic to pay 2, 5, 10% royalties to the original issuer. And so again, this concept of disintermediating all of the different counterparties associated with really anything out there in the world is I think hugely important. We're starting to see it again in sort of the art and content creation, but then you look at what else is Web3. I think it's DAOs and this concept of decentralized autonomous organizations, this concept of just direct ownership of value for consumers. And not your keys, not your coin. I think we've seen this recently in the markets with what's happened with some of these CeFi platforms and customers just kind of being like, oh, well, can't access my funds, can't withdraw my funds. That's an issue. And at the end of the day, I think I mentioned it on the stablecoin panel earlier, we're going to learn from this. We're going to be able to build regulations as these things happen. But at the end of the day, this whole evolution towards Web3, I think, is just consumer and retail ownership of value, content, and everything around it. And from a Fireblocks perspective, we recently announced the deployment of a Web3 engine, which essentially allows these Web3 gaming companies to build on top of our platform. And this concept of play to earn as an example, which if you are a gamer, I'm not, so I don't really understand all the dynamics behind it. But at the end of the day, you're playing a game, you're earning as you're playing that game. You can now take whatever you've earned from that game into your own wallet and now use that. Hey, take it to DeFi. Maybe you can swap that out for USDC or some other token. So I think it really brings a whole new dynamic to how people kind of live, work, earn, and manage their own funds.
Definitely. You've gotten very philosophical there for a minute.
I'm sorry, I do that sometimes.
I think it's good. So if I were to throw this question at you, I would say, how does Fireblocks save the world? You just talked about a lot of deep. I think your marketing person should record this answer too.
Either that or don't tell anyone.
Don't tell anyone. Nah, but listen, you talked about a lot of important things.
No,
empowerment, governance, so.
Yeah, I mean, at the end of the day, I think it really depends on where you see this entire market and ecosystem evolving. And at the end of the day, I think the goal and vision from my perspective of Fireblocks is to really be sort of the underpinning infrastructure to this tokenized and blockchain-driven world. And like I said earlier, I do think blockchain will underpin financial markets globally, whether that's in 5, 10, or 50 years. And I truly believe that we're in a position right now to be able to grow and expand our customer base, to be able to grow and expand our network and ecosystem, the partners that we work with that can really enable any type of institution to be able to build on top of our infrastructure. So again, whether that's a crypto native exchange, a lending platform, a bank looking to issue a stable coin, an asset manager looking to tokenize assets, a gaming company, I think whenever that time is, that's all going to converge with this concept of Web3. How philosophical that is today and how conceptual that is today, I think remains to be seen. But at the end of the day, I think there needs to be an infrastructure that underpins all of that. And I really hope and believe that that will be Fireblocks.
Well, excellent. Well, Bruce, are we out of time? You're coming towards the front.
We are out of time.
Okay. Well, I just wanted to say thank you very much to you and to Fireblocks for your sponsorship today, but also as a global DCA member for your thought leadership and for your commitment to stewardship of the industry. So thank you very much. It's been a pleasure to speak with you, Neil.
Appreciate it.
And thank you, everyone.
Thanks, everyone.